Okay, so the next thing I want to kind of go over too is the market psychology behind it. Okay, so let's use another example. Let's use something like, oh, we could look at Neo, I guess. I think not really too clean. Maybe Apple. Apple would be a good one. Yeah, Apple's a good one. So Apple chart right now, AAPL is a ticker. So we're looking at the daily time frame, right? Or here we can even go to a weekly time frame. Okay, so again, each of these candlesticks are 1 weeks of action. And just looking at it from a larger time frame, the market psychology of all of these chart patterns and how you guys can kind of associate what's going to happen with the stock, it comes down and it boils down to pretty much human emotions, human psychology, and just what human behavior is going to react on. Okay. Obviously, when something is trading at a level of resistance, right? So I'm gonna go back into the 1 year one. We can even zoom this out. Let's make a nice rectangular box so you can see. So a nice resistance zone where the psychology behind this, right, is that you had this huge run up of buyers, right? Simple. You buy, it goes up, it sells, it goes down. However, when we hit this point of, resistance, and you have this little dump and sell off, and then we bounce again and we have this retest. The reason why these support and resistance levels are so important for price action traders is because this is what monitors a when humans have enough greed and they want to take profits at this level, right? This is going to be pretty much crucial when you trade going forward into the next time frame. And when we retouch again, the reason why we sell off again is because we had previous action of other humans wanting to sell at this price. So they think it's either this is a good profit target to make money off of, and I'm going to be out again, and it's going to be a validated level of resistance, or it's going to be people who chased this run, bought at the top, and obviously it dumped on them. And now when buyers brought this back up, these guys who are bag holding are saying, hey, I just want to get out. I want my money back. I want to break even. So I'm going to dump what I bought here, causing this to go back down. Right. And of course, trading, there's always going to be a winner. There's always going to be a loser. We know that. There's always going to be someone on the other side that's making more money, making less money, losing more money, losing less money. But again, from a market psychology standpoint, if you can understand that we sold off here, buyers bought back here, and that there's always a round circle of many different traders out there that will either enter here, enter here, enter here, or exit here, exit here, exit here, you're going to start to realize that this is all just repeated patterns happening over and over and over again, which is why these are going to be very strong levels of profit targets. Also levels as buy zones as well. If we do have that breakout, right? Obviously, right here, when Apple did break out, this was a huge fake out as well because buyers could not hold this level up. Now, going back to what I was talking about to risk the reward, if we bought this breakout and we did not collect any profits, this should have been our stop from what we were to be risking, because this is when buyers should have kept this up. We should have another leg up to the upside. However, that wasn't the case. So you should have been stopped out there right off the bat. But again, going back into looking at it, right? Bag holders, they bought at the top, comes back over here. They want to make their money back. So they sell again, have another dump, right? And that, if I don't know, some of you guys are more experienced. I can write it up or something, but if you guys remember the W pattern, right? This is the same psychology, the same psychological standpoint of how the W patterns usually show a bullish sign, is because you have bag holders that sell or that bought. Obviously, they can't sell until it goes back to this level to break even. And when that does happen, it dumps again and they think that they're happy. However, you have to keep in mind, the people that weren't bag holding bought this dip, right? This level right here. Now, if it goes back up here, and let's just say they take profits as well because they saw this level of resistance and it dumps back up here, they know that buyers brought this up before. So you're going to have those same human, mindset of, hey, I'm going to buy it back here at these levels as well. And of course, that's what pushes it up again. Okay. Um, this is a little bit more a simpler example. And of course, that's when you have consolidation, range traders, and whatnot. If you have a breakout, obviously buyers are pushing it up because they want something. They think it's going to create a new level of support. And if it does, and it creates it up to the upside, that's confirmation for you to trade it to the upside. Something a little bit more, I guess, detailed is, let's see if, do you guys know if there's any bull flags today or something? Let's see. Not really clean. Jumo, how do you differentiate between M and W patterns? To make it simple, you don't until you have that letter actually break out. But what you couldn't tell is just shooting a shot from a risk to reward standpoint. Meaning, if I go back to Apple, because again, there's no 100% guarantees, right? When you guys are trading, everything is based off probability, which is why when, let's just say you think that this is going to be a W pattern, right? Which technically it is. When it comes back to this level, again, when as a trader, and you want to trade this back to the upside because you think it's going to repop, your risk should be here, your reward should be here. And you're still going to take your shot even when it gets here. However, if it gets here, you make your mark, you initiate your position, and it falls back down here, you should stop out right away. It's all probability. Okay. A good example, actually, now that you asked that question, is if you guys play poker, right? Texas Hold'em, right? It's all probability, right? You have a pocket aces right now. Your odds are very high. Let's say the flop, right? The next three cards is going to be an ace, a king, and a jack. Jesus Christ, your probability is almost like 95%, right? So you know that you're technically supposed to win. Let's just say the river becomes a king. So now you have two kings on board. And there's only one ace on the board. Now your probability of that happening is, like, of course, much less as well. If someone else is holding a king, and they have four kings on deck, let's say they have a pair of kings, you have a pair of aces, you only have one ace on the flop, and they have two kings, your probability is going to change, right? It's going to fluctuate. So same thing as in when you're trading. If you think of it like this, you're going here, you see this two levels already. Let's just say this is the flop. All right, and you see it kind of go back here. You're going to shoot your shot, meaning you're going to place your bet to the upside because you think it's going to bounce here again, right? From this area, if let's just say it falls here, you're going to stop out. You're going to exit, right? If you're playing poker, let's just say you have pocket aces, like I said, and then there's three kings on the board now, right? And you have another player that's saying, hey, I'm calling you, man, no matter what, right? You're probably going to fold that hand, right? Keep in mind you have three aces, you have two aces, there's three kings on the board, right? Your probability of you winning is very slim. So same thing as trading. When you differentiate these patterns, you really can't. However, what you can is when you do is you shoot your shot as a risk to reward standpoint. I want to show you guys like a bull flag too of how you can kind of gauge. Oh man, is there like a 4 hour? Yeah, actually, this is decent. Let me make this. All right, so let me zoom back out again just to show you. So you guys remember when we caught Boeing earlier in this week, right? And this actually answers your question again, Jumo. We saw that, or we knew that 205 was going to be our potential buy zone, right? Because we did our top-down analysis. We knew that this was when the stock sold off, buyers said, fuck it, man, this shit is oversold. We need to go back up like immediately and very hard, right? So I knew if it ever does come back to these levels, we're likely going to see that again. Was I 100% sure it was going to happen? No. However, the probability was a lot higher that was going to happen based off what I saw here. Okay. So from that 205 buy zone, right? Which again, do you remember when we swung right over here? We had that same replica of what happened in the past. Okay, buyers shot this up, said, hell no, this does not belong below 205. It's got to go up. After that, from a psychological standpoint that when buyers bought this here, you'll know more buyers are going to say, hey, buyers bought this here. I'm going to buy some if it ever comes down here too. Do they know that it's not going to drop, or do they know it's going to go higher? No. But the fact that they know what their risk to reward is from buying here than buying anywhere else is much greater. Now, looking at the bull flag now that we caught this move, we had a nice flag. We're flagging right now. This is what you have or what you call the initial buyers, initial seekers of catching the move, right? Because like everybody else in the world, there are people that are very experienced. There are people that are not experienced. There are scalpers. There are swing traders. There are many types of, human engagements of how they want to trade and make money, right? Some people are okay with 2% returns. Some okay are minimum of 30% returns, right? And you see that within the group as well. Sometimes I'll take profit at 30%. Some people are like, nah, I'm going to hold until it's 500%. You have that whole psychology behind of how this initial move is. Now, because we caught that initial move here, right? This is where you call it initial seekers of collecting profits, right? And that's where that bull flag consolidation period does happen. Okay. If we were trading commons and I saw this, I would definitely not get rid of my commons. Obviously, because the common stock of how it moves is pretty much based on price. You're up a penny, you're up a penny. You're up a dollar, you're up a dollar. You're down a dollar, you're down a dollar. Whether when you're trading options, right? You don't want to be trapped in any kind of upward movement and in a long consolidation period because you'll be hit with theta, right? Eventually, Vega and the volatility of what that stock did move is going to affect your premium as well. But again, just going back to looking at it from a purely psychological standpoint, early buyers, profit taking, next leg up is when you have the FOMO chasers, the FOMO buyers, right? Or you have the people that are actually trying to catch that confirmation. Okay. So if you think it like this, BA probably does have another leg up, give it or not. But from a risk to reward standpoint, seeing the SPY, right, looking at it and the broader markets pretty much going berserk for the last month, I don't like the risk to reward to trade to the upside here. If anything, I would like to wait until it retouches that 205 buy zone, because when it hits that 205 buy zone, right, it could be a triple bottom that forms, right? And I will have a minimal risk. If I were to enter here, right, yes, I could use 210 as a as a stop loss, a mental stop loss. But for me to kind of just gauge this first is a little bit more difficult, just because again, this could consolidate, right? We already caught that massive move. So it's going to be a little bit more harsh on how you want to trade. However, if the bull flag does break out, causing this here, one more leg up, off that break is where you could potentially scalp to the upside as a day trade. Okay. Of course, you're not seeing all of this data as you're day trading because you're going to be on a 5-day minute or 15 5-day minute chart. But as long as you have those levels and you know that, hey, this is about to break out in the daily, that's going to give you that conviction, right, to trade to the upside. Yeah. So let me see if I could find one more, like a cup and handle. There was I think, was it Neo? Kind of like Apple, I guess. We can start just to dive into it really quick. Psychology, resistance, sellers, 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 right? Fake out, pretend this is not here. Pretend this is a huge level of resistance. Nice dip, right? A rounding base, right? A rounding base actually isn't bearish. It's actually very bullish. Oh, it was AMD. Here, my bad. Let me go look at AMD really quick. AMD was a beauty. Or was it AMD? Guess not. There was a very clear cup and handle forming, but let me see if I can pull it up. All right, just use a web browser to look for a nice cup and handle. Hopefully that's clear enough. But yeah, looking at a cup and handle, right? Same thing when you guys see it. Obviously, buyers push it up. You have a level of resistance of where it sells, right? You have that same level of resistance act as confirmation of when it sells, right? Meaning buyers push it up, someone collected profits, rounding base, right? Pretty much a consolidation period. And you have another boost of sellers. Now, when this actually makes a higher low, right, which you can see on the chart, this is where you can have that bullishness start to pick up again. Because we're forming higher lows on a cup and handle, when you had two levels of sellers, potentially causing it as a double bottom, a double top, this is actually going to squeeze this to the upside because we're already making this into a tighter range form. Okay. Simply put, sellers overdone it, buyers are winning this race, right? Buyers again pushing this up and winning this race, and at that squeeze point, right, buyers are still continuing to squeeze this to the upside, which is why cup and handles are known to be one of the most detrimental or spectacular breakouts, if you can really catch them, because usually the breakout point of where you could collect profits is pretty much the height of this. And it's usually the longest, whatever you want to say it. But yeah, you guys have any other questions? I think if you guys start trading and looking at these patterns like that and looking at potential price targets and risk to reward, you probably, don't even need alerts and whatnot. Just trade that same way, trade like a robot. You see a certain level, like I said, holding up or not holding up, whatever it is, you want to trade to the up or downside, as long as you have those markers set of where you're going to exit and where you're going to enter. That's pretty much the game plan day in, day out. Of course, there are many other factors that I think you should also look at, like I do reiterate every single day, is look at SPY, look at QQQs, follow the broader market indexes, because if AMD is scaling out here, and let's just say SPY and QQQ is falling down, and DJI, the likelihood of this continuing to the upside is technically low. So if you were to catch this breakout, I probably would have collected profits. However, the NASDAQ was going higher. Semis in general, the whole sector was going higher. But yeah, that's just how you guys should trade. And again, one last thing. When you guys are trading and you guys are like dwelling on potential gains that you guys missed out, or any of that stuff, like just don't. I've said this to everybody before. Our job as retail traders isn't to catch this bottom and catch this top. It's fucking impossible, even for these hedge funds and all these guys. Our job as retail traders is literally to catch these in between moves, man. Like this right here is good enough, man, for a nice fat paycheck, right? Or if you're catch this and move right here in between, that's a fat paycheck, right? For you to dwell on like, oh man, I missed the fucking 30 cents here and $2 here or something, you're just gonna fatigue yourself out. You're gonna, it's gonna mentally drain you. Just be happy with what you have, with what you got. Be happy that you were able to stay consistent and stay disciplined to follow your levels, to enter here, enter there, and be good with, right? No matter what the outcome would have been, right? Of course, there are times of when you enter and you exit, and when you exit it freaking dumps, and you're like, "Fuck yeah, I'm God." Right? I knew that I was going to sell off, right? You feel really happy, euphoric, whatever it is. And that's a good feeling, right? It's a confidence booster. But, for you to make money and still feel sad and down, that's very, very bad for your mental health. Okay. And of course, this is going to be a long-term thing, right? You guys trade, you guys invest. It's going to be a retirement thing. So don't be too harsh on yourselves. Same with Neo today for me. Like I exited and it was a lot more upside, right? Obviously, in hindsight, it did sell off, right? Looking back at Neo right now, right? So in a way, I'm like kind of happy, right? Because it sold off. I was able to re-enter rather than just hold it from here and then kill my mental capacity as this was trading all fucking day, right? So that felt better for me. But something like AMD, Nvidia, where you missed out on a ton. Hey, no, give yourself some props. You were able to execute the trade the way you wanted to. You were able to make money the way you wanted to, and just repeat that status, day in, day out. That's what's going to keep you here in the long run, right? You don't want those home runners. You make fucking hella money, and then the next day you lose a ton of money. That's going to kill you, man. It's really going to kill you. Susan Toe, do you wait till the candle closes or as soon as it hits the stop loss, you execute your stop loss? Good question, actually. So every time I trade, you realize it in the chat, I actually rarely do get stopped out because I give myself 2 to 3 buys at any given time. What that means is you guys know like my cap is around 10K per position. Obviously, I never enter 10K at a single time, right? That's just too much risk involved. I'll enter maybe 2.5K, 3K. However, if let's just say for Neo's sake, I entered here, let's just say, and I didn't collect profits here, and it scrolled back down here, but I saw that this kind of showed me that bullishness is still here. I would have made myself and give myself another buy potentially. This is actually a bad example because it didn't sell off, but here, let me give you like, oh, Boeing is good today for this one actually. So like for Boeing, okay, I always give myself 2 to 3 buys. Let's just say I bought Boeing right over here at open, right? I didn't know it was going to go up. I didn't know if it was going to go down. It looked like it went to go up. So I bought, I entered. I would have entered here a third or quarter of my position, like 2.5, maybe 3K or whatnot. If it did invalidate, which it did, right, and it sold off here, I would have waited, right? Let's just say this was my stop loss. Okay, I would have waited until I see some sort of consolidation, which it did happen. And when this did happen, I would have placed my bet and added one more time. Okay, another 2.5K, 3K, whatever it is. So now my dollar cost base average is probably around in the middle right here. So in a way, if on this move up to Boeing from previous days, from blast down here to previous days close, I technically actually would have made money if I exited here, right? If I wanted to swing it because I had a long-term thesis that I think Boeing is going to go higher, right? So I'm not really worried about the day's action. I still think that they have some time to move higher. And let's just say I continue to hold, okay? Right, and obviously you're looking at this day's action and the bottom low of day did hold, right? And you wanted to give yourself a third buy. At this point, I probably wouldn't, right? I would just stick with my initial 2 buys, see where Boeing opens at tomorrow or how it trades tomorrow. If it does open up lower, right, and I do still think that the thesis of it is to go up, I would hit my third buy. If you did not collect your profits here, right? If you did not get out of this trade here. But other than that, yeah, if it comes down to stop losses, if let's just say hit my third buy, and then I'm putting a very tight stop loss now. Let's just say this is my third buy right here, and Boeing just blast down right here. For sure, I would have been all out here, all that 10K out. Obviously, I would have lost a lot more money than just initially just getting out of the position. But I like to give myself that leeway room, right? Because like I explained earlier, we're retail traders, right? You can't always time the bottom. You can't always time the top. And I know other traders out there, they'll probably disagree. They'll say, hey, your first initial position in it and it hits your stop loss, you get the fuck out. For me, I trade a little differently because I'm very psychological, detailed oriented. I know, like, if it goes down here, market makers are going to say, this fucking sucker, I'm going to take his stop loss and then I'm going to move it back up here, right? Whether when I give myself 2 to 3 buys, let's just say I was wrong here, it sended down here, and instead of selling and stopping out, I bought more here, right? I'm reversing the psychological play now because everybody's like, oh, this should be my stop loss, 212 psychological standpoint, whatever, blah, blah, blah. So market makers would be like, oh, I'm gonna take this beginner's money or whatnot. And then it kind of goes the opposite way, right? So yeah, like I said, as a retail trader, it's hard to time the bottom, hard to time the top. It does happen when you do, it feels great. But I always give myself 2 to 3 buys before I actually get stopped out. Obviously, that's a lot higher risk if you can't do 2 to 3 buys. But personally, it's been working for me with my system of how I trade. And I know I don't want to change anything that's been working. But again, every trader is different, Susanto. So I know some people that enter, and like I said, if it hits this level, they'll be out, completely. They'll look for the next entry. That is a possibility too if you like to trade that way. But for me, that's just too hard. I'd rather give myself a little bit more wiggle room as I trade because it just feels better, right? I mean, you can't be right at the first entry every single time. It's statistically impossible. So I give myself 2 to 3 buys. Yeah, it's all probability. Yeah. Any other questions? If not, we can end it here, guys. Great chat. I think we do have some more tickers to trade to make some money next week. Tomorrow I feel like it's gonna be a down day. But nonetheless, there's always opportunity that happen, like AMD, Nvidia today. So if that's it, I'll see you guys tomorrow. Thanks, guys.